The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, we're back here. Nice day today, a little cool, but we're waiting for the Fed, just kind of biding our time. Dow's down 31 at 19,879. S&P is down 4 at 2267. Comp index is down 3 at 5460. This is going to be interesting because the VIX is at 1266, still under the 13s, still under the teens. Very interesting here. The E-mini is down 525. The S&P is at a leg D, could possibly be a peak D. Look at this inside track, Chapman wave inside track repellent zone. We went just above it. That becomes a support level all the way to 2244. Let's see what the Fed does today. I'm going to talk about that in a moment. Leg F/A in the weekly chart. Oh, man. F is negative, very negative. A is really positive. I mean, there are total extremes, but everything about this suggests that it's an A, that there will be a pullback at some time in the weekly chart, maybe next week. You start from a peak A. There's tremendous support in the 2220 to 2180 area, and then we start the next move up. That's kind of the way I'm thinking about it here. Now, let's go to the 120-minute chart. For my subscribers, I showed that there's an alternate count, and I really wanted to make a big deal about this alternate count. Once in a while, I go back. Now, your most important objective in the course that I'm teaching, three-part course, started last Tuesday. Coming up this next Tuesday will be the second one where we go into the MACD, the moving average, convergence, divergence, and the slow stochastic, and the 9-period moving average, and other technical indicators that I use. But your most important objective is to get to the last letter and feel comfortable about it. If you're uncomfortable, you just have to wait for another letter, and that usually clarifies it. But what I'm looking at here, let me just move this here just a second. What I'm really looking at here is that within the context of the 120-minute chart, I think there was an alternate wave count at E at 2278.25. That means we can go to an F with a sudden spike to the upside. But even more important than that, it says that it's confirming what I'm looking at in almost all the charts except for the IWM. I said to subscribers this morning, IWM going to an all-time high. It would be so unusual that it doesn't make a leg D before it starts a deeper decline. Hey, it can do that real long, but we'll see what happens long from lower down. And I'm just expecting that at some point we will have that sudden spike to the upside. Look at this. I showed a couple of charts today. I showed Teledyne. For anyone who used to trade Teledyne years ago, it was like one of the first stocks that went to really strong triple digits and held there. It was an amazing stock. It always has been quite an amazing stock. Just an industrial conglomerate. TDY is the symbol, trading at 125.60. I showed that it made a peak F in my work. I even put that in with a down arrow. I said, I don't think I really want to go short. I really want to be buying this if it pulls back. I don't want to mix up my mental focus. Yeah, maybe, yeah, there's an opportunity to get 3, 4, 5 points. But I do think that 119 area, the 9-period moving average, somewhere around there, there's going to be support. And the monthly chart is only in leg B. I also showed Berkshire Hathaway. This is BRK.B. This is Buffett's baby. And I said that it's making a leg D, but it's still holding well. The MACD is good. The stochastic at 94% is good. The weekly chart has just really started its big strength, and it's an E/B. I'm inclined to think it's more a B, and the monthly chart is in C. What was the other one that I discussed? Oh, Syntas, which is what I focus on for my subscribers over many years. I mean, decades actually. We've been looking at this as a foreteller of market weakness or strength, and it was right here this morning. And I said it needs a leg D above 121.28. And then we're going to be looking at it slightly differently. But I didn't discuss this, but I will discuss it probably on this coming Tuesday night, I'll be discussing this V-shaped formation, the one I call the Groucho Marx eyebrows. I didn't make them very thick, but it's this V-shaped pattern that actually closes above the left side high at 119.94 back in the week of September the 9th of this year, and it's gone to a higher high, and it's closed above that. So this portends something else slightly different. But look at this. This is a leg E. I could even make a case that it's really a brand new leg B in the monthly. I'm going to do a work on this. I wanted to see if we can get to the D. I wanted to see by Friday if we pull back. My thinking here is that actually that peak G was the top, and now this is really a brand new leg B. That corresponds to most of the other indices. So where are we? Let me just run these down. So I'll run these with the, how are we doing for time? Yep, we've got time. The Dow's down 34. It needs 90,954 to go to another leg, which would be leg G/C. At this particular point, the MACD is very good. 94% is really outstanding. Sorry, the MACD is very strong. The stochastics at 94% is very strong. The on-balance volume, remember, Tom uses volume. Many people use volume. I use volume, but in a very different way. I use it as on-balance volume. It harkens back to the Granville days. And even then, I used it in my initial thing. I used to, I'd add up every single morning before I went off to teach. I used to be a professional musician and professional player. And then I'd do my work and everything with this legal double-sided pen. I'd get the lines all the way, and I'd write every single index and all the Dow stocks. It was just, what a lot of work. And then I found that it only worked in certain situations that when volume expanded. This is in my own analysis. There are some stocks that respond straight away, and some stocks wait. I remember Eastman Kodak used to be one of those that didn't move right away when the volume expanded, but Merck did. They used to be in the Dow. So I'm looking at this and I'm saying, hey, my unbalanced volume is saying, be careful. We are getting into kind of high territory here. You could go a little higher, but we're starting to get to where the elastic band is stretched a little too much. Same thing with the weekly chart. Let's go to the S&P, SPX.X. Look at the S&P is down just a little, down 4. It's in a leg E. Probably going to make a peak if there's no new high above yesterday's high of 2277.53. I'd like to go to the IWM to show you that it's holding quite well. It just hasn't gone to 138.83 for that leg D. That's kind of the requisite of the Chapman wave. That's what we expect. Let me go through, and we are still along the Dow. Let me go through the QQQ series here. 120.50. This has been a wonderful, wonderful. Now, I'm not sure if this is an E or a brand new. I'm calling it an E right now. But in the weekly chart, I believe that's a B. And the monthly chart, that's a C. All of this is really very positive. And now let's go to gold. Gold should be rallying here. It's gold, I think, should be running about, it's running 6. 1,165. It's hit that 9-period moving average. I really want to go to the TLT because that's what we're going to be discussing. You see that little candle right there on the 9-period moving average? It's up 85 cents at 118.99. Look at the TBT. It's making a peak G/C, pulling back. So it's I'll take a moment when we get back. I want to talk about this. What the Fed really needs to be following. In fact, the Fed is lagging the indicators because we've already moved into much higher territory in the yields. There it is. I'll be back. Basil Chapman, Tiger conditions out. Dow's down 32, S&P's down 4, and the TYX is down 0.52 at 30.95. The high was 31.96.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back. So we're looking at my triple yield chart. This is the TYX. Look there. Leg E. Made a high of 31.96, starting to pull back. It's hit the trend line. All I can say is, look, we've been here many times before. No big deal. What is a big deal is that the Fed now has to make a kind of a catch up. So if they say quarter point, and then we'll look and assess for the next time without saying there'll be another time within a month, I think the market will just handle it very nicely to believe that the transition from lower rates to higher rates is going to work out as smoothly as thus far it's done. It's an amazing thing. So all I can say is get ready for some bumps, but don't be surprised if in fact the market is starting to digest this a lot better than one would have thought. But at the same time, I've gone through so many charts, daily charts. Most of them are right at the cusp of having some kind of a I call it a digestion phase. That's all. And look at this. There's been a recycle to a G/C in the 10-year, and that's really the one that counts. So that says, wow, G, and it stopped at an F in the 5-year. Let's watch this one. I'm going to watch the 10-year very closely. And look at this. What happened to the how the stall occurred in wood, which is the I shares of the global timber and forestry ETF. Look right there at D. What do we call for? Well, what is the prime objective? This is what I've been teaching in my course. If I can just find it right here. Right. Disappeared. Don't disappear on me. There you are. What is the objective in the Chapman Wave methodology? Is to find the lowest low bar and merely count each successively higher peak until you get to D. D is where other things can happen. It can recycle higher. It can stall. It can actually go into an instant restart, which is the most exciting thing, because then you can get not only another 4 peaks, but very often it's more than it's 5 peaks to the upside from there, from where you are. Or it can be the sharpest decline. So that's where D is so important. Now, here's the other thing. Underneath the previous high, the HGX index is stalling. So I think it's going to be very significant as to what the Fed says it's going to do. The market can handle, remember, market always handles uncertainty every single day. I believe that the market lives with uncertainty, but the market hates uncertainty about uncertainty. What does that mean? It adds one derivative away, and all of a sudden the market gets really nervous. Look at the TBT. Like the 10-year, it's gone to a G/C. It's pulling back sharply. All it has to do at 41.12 is go to 40.20, that particular support level, and immediately I have to say that's a G. There's no way that that's a C. We made some kind of a short-term top. However, look at the weekly chart of the TBT, which is the inverse of the TLT, and that's saying the MACD is very strong. Stochastic is very strong. On-balance volume is already turned down. RSI is already turned down. It says that there's a little vulnerability here between 41.14 and 38.94, the 9-period exponential moving average, and 44, let me call it 44.76, the high that was made on January the 1st of this year, the first trading day, the first trading week, I should say, of this year. So this is, in fact, I'm going to do this right now. I'm going to put in a rectangle and say, would not be surprised if yields are just going to be stuck in this range for a little while. There you are. Okay, so now we've done yields. Let's look at the dollar, because the dollar, in fact, continues to me to be very important. The objective, what is the objective? Always, here we go, is in the Chapman wave methodology to get to a D. Other things can happen. Well, lo and behold, what did we see? We saw a monthly leg D, and it happened on the 25th of November. So it had just a couple of days to go for the rest of November, and then it's got all of December to go to 102.06 to make a leg D extension, even though it's by 1 penny. And so far, it's stalled at a peak E in the weekly chart. And here again, I'm going to put in some kind of a rectangle to say, okay, trading range of unfolding until it can break that trading range, and maybe it needs a rest after such a spectacular move from 91.92 up 10 points. It's 10%. It's a big move. In currency, it's a big move. So let's see what happens. So now I can go into the nitty-gritties of what I want you to talk about. I think we've done everything. What have I missed? Oh, crude oil. Crude oil at this point is pulled back just a little bit. It's down 55 cents at 52.42. Remember, I said it's made a peak E in the daily. And my thinking here was that the MACD is strong. Stochastic has not confirmed that rally. And it suggests to me that the high that was made back on the week of the 10th of June at 55.20, that we might not go much higher than that. At the same time, I think that we might be holding between 49, let's call it 50 and 49 for now over the coming 2-3 weeks. And that's going to be very important. Now, there's another thing that's going on here. And when you're looking at, I just wanted to do this. Oh, yeah, a question. A question was, yes, 10-year T-note, I showed the chart, HYG. I wanted to look at the HYG. I did it before the show, and then I completely forgot it during the show. And that's gone to a leg D. So here we are at D in the high yield ETN, I believe it's iShares, what do they call it? ETF. iShares, iBox, dollar, high yield, correlation, bond ETF. With a name like that, I'm not sure I would ever buy it. I would never remember it. Okay, but the junk, JNK, which has the same configuration, is also at leg D. And it's in that retracement failure mode in the weekly chart that says, hey, be careful. This is where you've got to be. This is one of the techniques I'll be teaching coming up this week. Oh, and Tiger dollars. Hey, if ever there was an opportunity to have a win-win-win situation, this is it. Go to the front page of TFNN and just check it out. If any of the services that you get here at TFNN, if you're interested in renewing it, you'd like to get a nice bargain, a fantastic bargain, actually, go to the front page of TFNN and check out what you can see there in terms of, let me go there, why not? Look at this, it's called the Salvation Army. Let me find it right here. Come. Salvation Army Tiger dollar sale. Get a 25% bonus and a 10% donation in your name. I mean, we do it every year. Tom really set this up so beautifully. And it's a win-win-win situation. It really is. You get your newsletter, you get whatever you want, whatever services it is, as well as helping the Salvation Army. TFNN gets to make some money, but it gets to donate some money. and Salvation Army, of course, wins. This is really this is wonderful. This is almost like Thanksgiving, where you say, "Hey, non-denominational kind of thing. It's just everybody wins because it's a happy time, hopefully, and you eat and you help out one another, and it's just a fun time." Should be a fun time by helping out the Salvation Army. So the reason why I'm also bringing it up is my webinar. The archive of the first one is still going on. It'll go on all the way through. So you're going to have a chance to archive. And all I did in that first one was look at the basics like this. I showed the chart, the naked chart, and I said, how are you going to count the waves? And I said, you've got to be careful about every single one. Look here, this is 1899. The very next bar is a high 1894. You can't see it, but you have to measure it. My eye picked it up because I've done it so many times. And then it goes to B, and I asked the question for my subscribers. So for the people, both my subscribers and for those who did my course, I've sent out charts every couple of days to ask them to notate it. In this case, I've asked them to notate and to draw trend lines. So it's a very exciting time, and then they'll be ready for number 2 and number 3 coming up. Now,
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back, and I believe we just got stuffed out of our very nice trade in the IWM. We had the TNA, which is 300% long. I raised the stop. I felt that I didn't want to give back gains. I would have loved if we had actually kept it in today, the market at the end of the day, instead of being one of those wild, crazy days, it actually closes within a plus 20, minus 20 on the Dow, just to say, whoa, let's just assess this for a day or two. That's okay. We still got the long position, and we have got some protection, but I'm really looking to rebuy on sharp pullbacks rather than to be shorting. At this particular point, we do have some insurance, so that's okay. But, looking at those weekly and monthly charts, I have to tell you, this looks very good so far. Now, let's do a couple of other things I was asked about in the den. S&P asked me about potash, POT, potash core, Saskatchewan. It has potash and other minerals. It's gone to a leg B in the monthly. It's in a leg C in the, I did this a few times. Maybe. Yeah, it's a leg C in the weekly chart. Had a very sharp pullback, a very strong move last week, and then given a lot of that back today. I think it's a peak F in the daily at 19.88, and it's trading now at 18.57. Not such a big deal, but the MACD has turned down very sharply. The CCI is turned down sharply. The on-balance volume is turned down sharply. The stochastic now is back under 80% at 73%. My thinking here is that it could bounce, but I think it's going to be stuck between 1945, 1950. No, 1945. Not sure it's going to go much higher than that. And if it breaks 18, then 1766 is going to be the 200-period exponential moving average that it tests. And at that point, we've got to reassess to see how the weekly chart is holding, because it's 81% in the stochastic, and that's still very good. So I hope that helps you. Now, I'm absolutely wrong. If it takes out and goes to 20 by, what's today? Today, Wednesday? Yeah, by Friday or Monday, if it's hitting 20, I have to say it's recycled higher and is now in leg G/C. That's all. That's the way I have to look at it. Couple of things that I wanted to mention here. If you're looking at the USO, I was asked about the USO. USO is making a peak E in the crude oil. That's a peak E. I can't put a down arrow yet because the MACD is still quite strong. Stochastic is giving at the peak D at 52.42 on the 5th of December. It was at the MACD was very strong, and the stochastic was very strong. Now the MACD is still very strong at that peak E of yesterday at 54.51, but look at the stochastic, it's turning down. So it says to me that crude oil still has internal strength, but on a very short-term basis, it could pull back a bit. I tell you something, that the affect of the Fed speak this afternoon, whatever they say, this is where I always say that I go back to way back when Barron's used to report on a Thursday, I think it was. No, when there was an M1 and M2 was always reported on a Thursday at some point. And the market was waiting for it, and then woof, it would move up or down or whatever it is. And then, of course, you got the Fed, and they got all these different things over the years that everyone's waiting for. But actually what happens is that a trend stays in place until I can only think of one time, I don't even remember what it is, but I know there was one time where the Fed did actuate a trend change. Most of the time, the trend change is already in place. So that's why I'm saying if I go to the Dow INDU, this is, I don't really have a signal just yet. So if the Fed triggers a signal by having the Dow close down 150 points or more, or let's say going into tomorrow, it goes down 150 points or more, it starts to trade, let's say, under the 19,620 9-period exponential moving average over the next 2-3 days, that's a trend change for me. But if it just pulls back and hangs around, that says that the buy mode is still hanging tough. So that's the way I'm looking at it. I'm not sure that the Fed can actually make that change, but if I'm looking, say, at the QQQ series, which has gone to a leg E, at an E there can be a change. So I'm saying that this will be the one time that the Fed actually accelerates a move away from a high to start coming down, to start a more substantial, say, short-term sell signal to sell mode. We'll see. So that's the reason why, in a sense, I'm kind of upset that we are stopped out of our IWM, because it should still go to a D. At the same time, hey, A really good profit is a really good profit. What can I say? Now, a couple of questions here about the VIX index, VIX.X. You can see the VIX index is still only at 1271. It's down 1. I can just tell you this, that this afternoon I will be giving it up. We're actually in our positions. I don't know if I want to make many changes, but I'm going to just hold hands together. We'll hold hands and we'll talk about it. I will at 2:30 give an update. By 2:30, I should give the update on what I'm thinking here, whether I want to get out of our protection, whatever it is, or add to it. I don't know what I'm going to do. I think we've got our positions. I'm prepared to hold tight. I'd love to be buying on any sharp pullback. But in the meantime, what I'm looking at is that the volatility index at 1274, all I can say is that at 3 o'clock, if the VIX index is trading, yesterday's high was 1342. That's nothing. If the VIX index is up in the high 13s, maybe even 14, then this market has made a short-term top, and we're going to be coming down pretty sharply. All right. Now, if on the other hand, the VIX is either here or a little bit lower at 1250, and you don't see the TLT, which is right now up 89 cents at 119.02, the TLT hasn't gone to say 120 or 120.20, really moving up sharply. And gold has gone, the GLDs at, look here, the gold right now is at up 6. So gold, let's just say gold is at 11, instead of 1165, it's at 1178 or 1183. Then all of a sudden we start to see changes in trends. And that means that gold is going to act quite well for a little while. And then you will see the dollar. The dollar right now is down 29 cents at 100.78. It's just stuck in this arch formation, hasn't broken out, but it's holding pretty well. Dollar goes to under 100. That's going to be something significant. Dollar goes to 101.30s, up 70 or 80 cents. That's going to be significant. So the reason why I'm making a big deal about the numbers that we're talking about is that if I want the results at the end of the day. Yeah, we can speculate, but I'd prefer to have the numbers. And the numbers right now are saying that there's a good chance that we might have some kind of a sideways consolidation, and some sectors are going to still act quite well, and other sectors are going to take quite a bit of a breather. And I'm putting in that category. I think when I look at RIG, where did it go? Over here. When I look at, say, OIH in E, is that an F or is that a 23? 23. So this is an F in the daily. And if it does pull back, the OIH is the Market Vectors Oil Services. And if that suddenly slides underneath 34, it's a 34.57. No, let's say underneath 33.90. Then we've got a trend change. And that's really what I think we're going to be seeing over the next couple of days. We're going to see sectors rotate, and we're going to see some kind of a trend change in some of these sectors and some of these really good, beautifully active stocks that just need a bit of a break. I'll be back. Basil Chapman, Technicians Hour. I've got a couple of other questions here, and we'll get.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So we're looking at a question about Goldman Sachs and NYCB. So Goldman, where did I go? Yeah, let me just find, yeah? Oh, I didn't show this chart. I meant all morning to show this chart. This is, you remember I showed this yesterday, and in fact, I think I was talking to Tom about it. This is the 5-minute chart of the cash S&P. This is the real thing that you see when it goes by. This is what you're looking at. So this is a 5-minute chart. And yesterday we counted the number of Ds, and then we made an E, and then we started an inside buy mode. They went to peak A, gray B, and then gray C, and then all of a sudden went to a D, pulls back, and then it goes E and an F. And then there was a down arrow. And then there's a left side, right side price time match that I drew in. I didn't show it this morning because I wasn't on, but I drew it in. And before I was on, and it started to come down, and now what it's done is it tested the low of at 10:40 on the 13th of December. The low was 2,264.62, and the low so far today is 2,265.08. So we're getting close there, and you can see the left side, right side price time match. There's the channel. Look at that beautiful inside little tiny channel that I call the inside track repellent zone. Now it's in the inside track propellant zone, but it's already taken it out. So that says 2263.59 is the 200-period moving average. I'm going to circle that and say, hey, there's a good chance that at some point today we might be testing that. So that's how we look at things. That's how I'm going to teach. So what we're looking at is how do you take a chart like this and develop all these lines, and it's really very simple. I'll be teaching how you can go. Let me just go back to this Dow chemical, and the chemicals have been fantastic. But how do you notate this, and what do you do? How can you draw a channel? When I love to take, now when you come from a low, very often I don't take the exact low because the angle is always way too sharp. I usually take it from the trough that develops after that, or maybe there's a gap, as there has been from the November election gap up. So I like to take the gap. So if you take it from the series of lows right here, look at this. There it is. You can draw yourself a very nice support level. And then all you do, if you've got a ruler, you can print this out. You can do this by ruler. You don't have to have all, TradeStation is amazing for the technical charts and techniques that you can use. And you do that. And if it goes above there, I go green. And if it goes below there, it's the inside track Chapman wave repellent zone. And if it gets repelled from there, that means be careful because it could go all the way back to the propellant zone. And if it takes it out and goes above the green, closes above the green line, hey, that's fabulous action. And then you want to be looking at your wave count. So here we are. Here's your support level. I'm teaching how these things work. And once you're away from it, you don't even have to look at it. It's like the 200-period moving average. Why would I want to be looking at a 200-period moving average when I'm at 16.85 at NYCB, making a peak E, and the MACD is only now turning down. Stochastic still, it's at 78%. It's below 80%, but it's only just turned down. And the 200-period moving average is way down at 1522. But let me tell you, you break 1621, this whole area right here of support, suddenly the 200-period moving average, that orange-colored moving average becomes key. Those are the techniques that I'll be teaching. I'll be teaching very soon. Tuesday, this coming Tuesday is the second webinar in the series. Still time to get it. And if you sign up for my newsletter, then you will get a big deduction. But if you are in the course, you'll be able to check out the newsletter because I show many of these techniques every single day. But that will be afterwards. You will continue the subscription. So here we go. ESRX was a question that I had. ESRX is made a peak D, down 3 at 69.83. I just said this is not very good. I put the down arrow in a little while back. I was actually looking to short this, but it had a nice candle yesterday, and I got involved with too many other things. But yes, I would have. This is the kind of chart that says to me, with the MACD and stochastic turning down very sharply, this is the one that is vulnerable. And but it's going to find support between 65 and 64.46. The load was made on October the 28th. So shorting now, that's where you have to think of doing some kind of covering and then adding on a bounce. But if it goes right through, that's fantastic. So that's ESRX, which is Express Scripts. We were talking about yesterday. They took over Medco. Medco was fantastic for their services. I heard from many, many people. I also had that, and it was very good. And then Express Scripts was really not very good. And they took over the good company. It's improved the ESRX, but I don't think, I think that they still have internal problems from the chart formation. A high of 94.61 way back in 2015, and now it's at 70. It's not doing very well. All right, next question was, I had it right here. There was a really good question. Oh, that's right. In relation to the IYR, IYR is giving us a little bit of news here because it finally did that D. How many Ds have we seen that have been very important? Look at this candle, this red candle between yesterday and today. That's the deepest red candle it's had in a while, and that's at D. But the MACD is still very good, and stochastics at 88%. So this afternoon is going to affect a lot of these things, whether it's the REITs, the iShares, Dow Jones U.S. Real Estate Index, Trust. We'll know very soon, within just a few more, within 2.25 hours, 2 hours and 10 minutes, we will know. I can't wait, and I'll tell you why I can't wait, because what happens this week on Friday at the close is going to be giving us an incredible amount of information about 2017. Already, I'm expecting that 2017 is going to see higher prices, based on my weekly and monthly charts. We'll see that into the first quarter. Then I'm not sure about what happens after that, but it's the first quarter. Now let's just quickly go to the dollar. DXY was a question. The dollar, yes. The reason why I'm watching this very closely for a potential peak D is that we only went to nominal new highs. Look, 100.39 for peak B back in March of 2015. Then it pulls back to the 93s, and then it has a big move up to 100.51. But 151 is only 12 cents from the peak that it made about a year earlier. And then it pulls back even sharper and goes down to 91.92 and rallies back to this new recovery high of 102.05. That's just nominally high. You could even put a little trend line. Actually did. It's just above the trend line, and so far only one candle's closed above it. So this is a very important point for the dollar. I'm still positive on the dollar. We don't have any position based on the weekly chart, even the monthly chart. But I have to tell you that if the dollar over the next 3 weeks breaks 99 support, That's it for the dollar for now. And that EUR USD, that's what I was missing. I knew I was missing something. Will suddenly spike. And if it gets to this inverted Chapman wave Roman candle, if at 1.065, if it can hold 1.081 at any stage in the next month and a half, it's going to test the high of 1.087. And if it does that, all of a sudden your weekly chart is going to start to improve. So yeah, this is a very important moment for the dollar. So now I want you to do something else. Yes, I want to look at W. That's wheat. It's trying to rally. It's in leg B. Corn. Corn is in leg B. I want to look at HO, which is the heating oil. Leg E. Oh, this is very interesting. I'll be back. Basil Chapman, Tiger Conditions Hour. We're biding our time, waiting for the Fed speak. Dow's down 32, S&P's down 5. We're right back after these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So now I've got a question about Wells Fargo. Wells Fargo, I believe, has gone to a leg D, very quick D, in the weekly. See, this is going to be very interesting. The bank stocks have. Is this a sell the news? This is the issue. Is this a sell the news situation? You've had all these things running up in anticipation. Now you get the news. And if you look at the BKX index, I had a question on the banks. Let me just do the BKX index. You've made your peak E, but you're holding very well. So I suspect that, you remember I drew this in and I said in here is going to be an interesting rectangle formation at 91.47. I suspect that 95s could be the limit on the upside, but there's a real good chance that over the coming 5 or 6 weeks, the BKX index tests the 87 to 85 area. So in other words, more downside risk at this point than upside potential. So just be a little careful. That's the way I'm looking at it. Next question was the XOP. XOP. If I looked at it for a while, XOP has gone to an E and maybe an F in the daily. So all of these are saying, hey, just be careful here. This is going to be very selective. And what the Fed does today, I suspect, is just plays catch up. I'm not sure they're going to talk too much about the future. They'll talk about what could happen, but you've got a new president. Nothing really has been settled. So they'll just say if such and such and if such and such. But I think they're going to bump up a quarter point. I don't think they have a choice. Let's see. So that was, Judy said that's heating oil, S&P oil and gas exploration. So that just says, once again, I think I'm looking at the 200-period moving average in the weekly at 45.78. It's trading at 42.82 XOP. And I think it's just going to be attempting to get to the 45s, but I think it's going to be stuck here for just a little while it builds up some energy. So I think we've covered a whole bunch of things. Folks, you're going to have, don't forget, go to the front page of TFNN, check out, you've got the Tiger donation, Salvation Army donation. It's really a win-win. It's just every year it's gotten better and better. So think about that. And the other thing is that if you are interested in looking at these techniques that I discuss here every day, how to use the MACD, the stochastic, that'll be the next workshop. So there's a couple of practice sessions still to go that I'm sending out charts for people to practice and discuss them and what we're looking at. This is the basic, the core, it's what I call the naked chart. So you just take this chart right here. Let's go to anything. Let's go to D. D is, I can't go to D, it's already done. Let's go to X. Oh, so X is done. So I'll have to change it to a weekly chart. Let's go to a daily chart. There we go, daily chart. Let's go to something we've not done before. I've done everything. Z. Have I done Z before? No. All right. So just look at this. You identify the lowest. Oh, I can't do it. It's got too many letters. So I'm stuck on this one. I don't know what to say. R, do I have anything? Yeah, I've got one letter. So let's just move this one away. We're looking at a rider. You find the lowest low bar. It's not that one at 62.78, but it's that one at 62.53. You count peak A, peak B, a little bit of a peak C there, D, and now you've got a doji candle E. It says rider could be pulling back for a little bit. And that's what I'm going to teach you to do. Teach you how to use the trend lines. Look at this beautiful trend line. Just visually, I'm looking at this and I'm saying, oh my, look at that. From that, you've got a perfect resistance level right there. And I'll teach you how to use that. And then if the breakout would be green, and I'll teach you how to use this for the repellent zone. There you are, and it gets repelled. And where would you draw the next support lines? How do you draw the left side, right side price time match, where it could come back to? Those are all the things we do. How do you put in your up arrow that goes to, your plus sign that goes to an up arrow? All of it. And then I'm going to show you how the MACD can be so important. I'm going to teach also, somebody spoke about it recently, how the MACD can be declining, but the price can go up. What are the implications of that? I've done a huge study on that. We'll talk about it. So, folks, have a great day. 2 o'clock, important day today. But get your positions in. Don't get too carried away. We'll get a little whoopee, and that's the way it is. I'll see you tomorrow. Have a wonderful day, and stay tuned for all the great shows coming up.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.